If you talk to anyone long enough about the UK, two things usually come up: football and London. When Tom Wagner was looking for an investment opportunity, he wanted both. In the end, he got one.
It's an interesting story because our adventures in English football actually began with us looking at a London-based Premier League club. It was a great opportunity, and shortly after passing on the opportunity in London, the opportunity to invest in Birmingham City was presented to us, and it proved to be too compelling for a variety of reasons.
So it's more about the football than Birmingham?
The football is what drew us to the opportunity, but what sold us on the opportunity was the city of Birmingham.
So Wagner, the co-founder of New York-based Knighthead Capital Management, went all in, partnering with NFL great Tom Brady to buy Birmingham City Football Club and invest £3 billion to turn his derelict plot of land just 15 minutes outside the city's downtown into a project featuring a new stadium, commercial office space and transport links.
2 weeks ago, that bridge wasn't there.
Jeremy Beale is the club's CEO. He showed us around their new site.
We're planning on having a 125-acre site. And what you can see around us is you can see a new bridge which has been built, which is what will carry HS2 into the city. HS2, we always say, makes Birmingham London Zone 5. It makes us accessible from the capital within 47 minutes. And you can see the city skyline. Over to my right is where the stadium for Birmingham City Football Club will be built, up on a hill, towering over the city skyline. And we're really excited about that ambition.
The investment is welcome news for the region. But why Birmingham?
It's oft forgotten as being England's second city. It sits right between the two most talked about cities in the UK, with London and Manchester. It is a really, really interesting city in the sense that it's going through a transition from an industrial base to one that is transitioning to a modern economy. And it's filled with a highly diverse, very young, very educated, very dynamic population. And when you look at that set of circumstances, it makes for an interesting place to commit capital, an interesting place to pursue a very large and ambitious project.
That's music to the ears of a Labour government which is struggling to spur growth that's been sluggish since the great financial crisis,
Labour MPs are going on the record saying
and which has the opposition leader fearing that the UK may need an IMF bailout, a repeat of 1976.
I'm going to negotiate with the IMF on the basis of our existing policies, not changes in policies. And I need your support to do it. It means sticking to the very painful cuts in public expenditure on which the government's already decided.
Data from the Productivity Institute, a Manchester-based research firm, found that the UK does not function as an optimal currency area. A deficiency which means that the benefits of the country's monetary policy are almost entirely concentrated on London's economy.
The key there is that
Diane Coyle is Professor of Public Policy at the University of Cambridge and a former advisor to the UK Treasury.
The UK is one of the most regionally unequal economies in the developed world. We're right at one extreme, which is probably not a good place to be. And the problem about that is that if you want to raise economic growth nationally and improve people's living standards around the whole country, that growth is not going to all come from London or from places like Cambridge, where I'm sitting now. Obviously it's fantastic that we've got these extremely high-value, rapidly growing cities in the southeast of the country, but that needs to happen in other parts of the country as well. And I think there are actually some quite optimistic signs about that. If you think about Manchester or Birmingham, their performance has improved recently. And that's something that I would link to the devolution journey that the country has been on. One of the things holding back those other cities has been just an inability to make decisions for themselves on the basis of the area that they know well, the local needs that they know, the things that they can tell investors about what makes them attractive places to put money. In a sense, it's been a very long journey. The UK is very centralised. A lot of economic decisions for the whole country are taken in the Treasury. The Treasury can't possibly know what's going on around the whole of the UK. So there's a loss of information about local needs and local opportunities in doing it that way. And so many people in many cities, and Manchester's the one I know best, have been working for decades actually on persuading central government that more decisions need to be taken locally and that local knowledge needs to be exploited better. So it began post-financial crisis, really, with the devolution deal that's happened first for Manchester, subsequently for other cities around the country. And I think it's paying dividends because in the past decade or so, the whole Greater Manchester area has been one of the fastest growing areas of the country. So I think we're starting to see a demonstration of the case for becoming less centralised, allowing local authorities to build on the information they have, the know-how that they have about their local economy, and the ability to coordinate better among local actors. Because if you're an overseas investor wanting to put money in the UK potentially, one of the challenges is all of the different agencies and people that you need to speak to. It's much easier to coordinate that at the level of an individual city than it is to have a single front door in central government where they don't have all the information they need.
The improvements are beginning to show in the data. In the Office for National Statistics' latest figures, London recorded annual real GDP growth of 0.2% in 2023. The North East was at 1.7%, and the West Midlands 1.1%. Jason Wurer is the CEO of Lioncroft Wholesale in Birmingham.
Well, the landscape in the Midlands and Birmingham has changed a huge amount over the last 50-odd years that we've been in business. Lioncroft has seen a massive growth in the independent retail sector that we deal with, the mom and pop stores as you might know them, and the demand has been driven by the demographic in Birmingham, the growth of different communities coming in. Brexit in its early stages back in 2020 was challenging. We found that in the short term for business, for importation, for exports, it became very difficult to trade. And the labour market became very tight, so it got a bit difficult for about a year or two. And also, concurrently, there was the COVID virus, the pandemic happening, so that had a double effect on us. However, the medium-term and the long-term picture seems a lot more positive. So if we look at our region and we look at our country today, we're free to do trade investments and trade deals with various countries around the world. And it just feels that there's a real energy to this place right now. And it's just amazing to see. I've lived and worked in Birmingham all my life, and I think the energy of this region and of this city today is far stronger, far greater than ever before.
That's the energy Tom Wagner's looking to capitalise on and turn into a profitable investment.
Yes, for Birmingham, the city, I think the growth potential is extraordinary because we can help spur investment into a city that's in need of housing, that's in need of more office space, that I think could use to keep more of the talent that is educated there in the city of Birmingham by making it a more compelling place to live. And then providing for a venue of work and entertainment for the whole of the Cotswolds, the whole of the West Midlands, as an example. Those are places that are very dynamic and experiencing lots of inbound investment that will see a greater amount of connectivity into Birmingham, the city. And as it relates to Birmingham City Football Club, the opportunity for us is to grow the brand and to grow the club into something that I think is more commensurate with the underlying fan base that existed when we bought the club. It had always been a big club that had never really seen or achieved its full potential.
And likewise, London, which contributes around 23% of the country's GDP, far more than any other region, will always be the UK's star player. But for it to reach its full potential, it needs more from the whole team.
London is going to be the dominant city, it always has been, and we want London to continue growing as well. But the whole economy will be healthier if other cities are growing in the same way. At the moment, there's a lot of transfer through the tax system from London to the rest of the country. That could change if other cities start to generate more tax revenues themselves through their own ability to grow. So having a much more balanced economy regionally is good for everybody. There's often an idea that this is a zero-sum game, that if Manchester and Birmingham are growing, London is somehow going to harm London. That's complete nonsense. The more other cities grow, the better it is for London as well. I am optimistic if the politics aligns, and it is a political decision about how we want to organise the governance of the country and how much devolution we want. One of the things that tends to hold it back is this concern about the capability of officials in other parts of the country to deliver the kinds of policies that we have centralised for so long. That's not going to change unless we start to do it, and there are definitely ways to address that. If we don't try it, if that political decision isn't made, then we're going to be stuck as a slow growth country and the laggard in the OECD area. But there's a great opportunity there, and if the Chancellor and her successors care about growth and care about living standards, they're going to have to grab that opportunity.